The broadcast is now starting. All attendees are in listen-only mode.
Hey everyone, this is Jeremy McDonough, broker and owner at Mr. Lister Realty, here today to discuss the homebuyer process in the form of a homebuyer workshop. We have Brian Sachs from Homebridge Financial with us, and we're going to start by talking about why a buyer's agent is really important. You really want your own representation when negotiating a contract, someone to look out for your best interests. That's very important. And especially in this market, navigating all the ins and outs and ups and downs, you've got inspections and all that stuff. And so it's very important to have someone that represents you, that knows a little bit more about the process of buying a house. We can't be experts in everything, and there's a reason why us agents are out here. And remember that using a buyer's agent does not cost you anything. The seller generally pays the commission to the buyer's agent. And I'll show you later on in the webinar how we use some of that commission to give you a discount. As your buyer's agent, I'm going to help you establish your goals for buying a house, what you're looking for. I'm going to talk to your lender, help you get pre-approved. Now, I did own a mortgage company back in the day, so I do know a good amount about the mortgage process. So, with the help of Brian and myself, we can put together a plan for you that'll get you in a house that you really love and put you in a spot financially that doesn't make you, house poor or anything like that. Once we get you pre-approved and we've established the goals that you're looking for, we're going to set up a search for you. And that search is set up through the MLS, and we'll send you properties that fit your criteria. And then if you look at the pictures and read the remarks, and if you like it, then we set up appointments and take you out there to go see the house. Once we find the house you really love, then we're going to help you put together an offer. That means putting together a contract, making sure all the terms are exactly as you want them, making sure we get inspections, and then with regards to that paperwork, there is a lot of important dates and time frames, and that's something that will help you keep together, because it's very easy to take an extra day on the inspection, and then the seller can say no and you're out of contract, and that's a problem. And so we'll help you navigate that kind of stuff. Obviously, we're going to try to negotiate the best terms and price for you. We want to get you the house for the lowest possible price with the best possible rewards, whether that be seller help, which is money coming from the seller to offset some of your closing costs, lower price, anything we can do to help negotiate better terms in the purchase of the house is obviously what we're going to do. As we said, we're going to help coordinate the financing with our favorite loan officer, Brian Sachs. He's going to lead you down the road to actually completing the purchase. It's very important, in my opinion, for a buyer's agent and a loan officer to know each other and to work well with each other. It just makes it easier, and the process can be stressful, and this makes it a little less stressful. As we go through the contract time, we're going to do inspections. Obviously, with inspections come possible problems with the house that we're going to need repairs for. We're going to request that. We're going to lead you through that process. We want you to feel comfortable when you settle and walk into that house the first time. We want to make sure you feel comfortable. After we have the inspection negotiated, generally the lender will order an appraisal, and that appraisal is really for the bank. It determines the value of the house. The appraisal does have to be more at or above the actual purchase price. If it appraises for below that, then there has to be a renegotiation because the bank will only finance what the house appraises. We're also, once you settle or right before settlement, we're going to give you reminders to set up BGE. We're going to help you, navigate through moving. If you need movers, we can help you with that. We've got insurance agents that we work with that we can refer you as far as homeowners insurance. And we're just going to be there generally to answer all your questions and explain everything we can. I do a lot of texting with my clients. If I set up a search for my clients, I'll get a text message from them. Hey, I want to see this house. We'll go back and forth, and then I'll schedule it. We'll go look. Right before settlement, I always like to do it the day of settlement. We do the final walkthrough. That's just to check to make sure that the repairs were done and to make sure, while the house maybe was sitting vacant for 30 days, water didn't come in the basement or anything like that. And with settlement comes a title company. As a buyer, you have the right to choose your own title company. Brian and I definitely have some people we trust that we like to use. And the buyer has the right to choose. So we can, refer you a couple title companies, and you can choose which one you want to use, or you can just, take our word for it and use the guys we normally use. Either way, it helps. Like I said, just like with Brian and I working together, we like to work with someone we know. And then you're in the house. And from there, we like to stay in contact with you. We're here to answer any questions, obviously, down the road. If you get something in the mail you don't understand, you can always give us a call. And then the next question is, why rent when you can buy? There's a lot of positives to buying a house versus renting. And I think Brian will be able to show you in the next bunch of slides why that's important and why buying a house will set you up financially for the future. I know you get the tax deduction, the possible tax deduction, and the interest and taxes. But there are a whole list of reasons why you would want to buy and not rent, which we'll kind of go through as we go through this webinar. I want to introduce Mr. Brian Sachs. He is the loan officer that I work with, and he's going to go through the home buying process and talk to you about how the financing works and how it's all set up.
Well, thank you so much, Jeremy. I'm actually honored to be here. I saw something on Facebook recently that's it's really appropriate, and it's really kind of funny. And what it said was, it was a meme, and what it said was, if you're renting, you are still making a mortgage payment. The question you have to ask yourself is do you want to make your landlord's mortgage payment, or do you want to build your own family's wealth in your own home, making a mortgage payment? But either way, you're making a mortgage payment.
That's right.
I thought that was cute. So thanks for walking through the buyer's agency, and thanks for having me here today. I'm going to share with you all kind of what we're going to do on this workshop. And each and every one of you should have received a workbook, and you can download this workbook and make sure that you're taking notes. But honestly, the fastest way to get your questions answered is just call Jeremy or myself. No obligation, no cost, so it's certainly the right price, and we're here to serve you. So let's go over what we're going to cover. We're going to talk about the 3 types of lenders and which ones are best for you. Over the years, you have clients say, gee, I called, Bank of America, and I called a company my sister gave me, and I called, the person that my coworker gave me, and I got 3 different answers. I know that happens, and so I'm going to explain why that is. How to get more take-home pay to pay your mortgage. Different types of financing And so you can know which one is best for you. How to buy a home even if you don't have perfect credit. And I saw an interesting statistic, Jeremy. It said 64% of Americans have a credit score of under 660. 660 is okay. It's not great. It's not terrible. But there are ways to fix it. There are ways to fix it quickly. But in many cases, you don't even have to fix it. There are programs available to you right now. I'm going to share with you a document that absolutely increases your negotiating power. You know, for those of you that are going to be working with Jeremy to buy your home and take advantage of the special opportunity he offers, you should know you're working with a rock star. He is an expert negotiator, and you definitely want to engage him as your buyer's agent so you have basically that power on your side representing you. So let's talk about why people rent. Why would you rent? Well, a lot of reasons. There's 5 that I usually come across. Either you're new to the area, and if you're new to the area, it's always a good idea to rent first because honestly, you want to get your bearings and make sure you have a feel for the area and know what areas you like, what areas you don't like, what amenities you need in an area. So number 1, I'll accept, but the other ones really are myths and they really can be overcome. And we'll share that. Maybe you feel you don't have enough money for down payment and closing costs. Jeremy and I have gotten clients into a home with no money out of pocket. And the way we do that is with grants, with expert negotiation on Jeremy's side. There are all sorts of programs. So don't believe money is going to be your issue. Maybe you've had past credit issues. I mean, who hasn't really? Including some people have even gone through a bankruptcy or a foreclosure. Well, that doesn't have to stop you. Thinking it's hard to qualify for a mortgage. The truth is, when you're working with professionals, it really isn't. And, we do run across clients occasionally that aren't ready right now, and we will work with you. We will help you, and we will give you the suggestions and the ideas of what you need to do so that you can get a mortgage. Or some people just think they can't afford the mortgage payment. I got news for you. Rents are rising rapidly. I don't need to tell you that if you're renting, right? And the only thing you have renting that you're guaranteed to have again next year, you know what that is? It's another rent increase. And the question becomes how much. So
Yeah, I think I read, Bryce, sorry to interrupt. I think I read something about rent is outpacing mortgage rates. Even as mortgage rates rise as fast as they're rising.
Significantly, yes. Rents are outpacing, most mortgage payments. And I mean, everyone here knows that. It's important to restate it because why make your landlord rich? Why not take advantage of this and have a flat payment? I'm going to show you all a little bit later in our presentation. If you're driving, this is a good time to pull over if you're listening to this, because what I'm going to say is going to shock you. Okay. I'm going to share with you a way to have other people make your mortgage payment. How you like that? That's a big one. So stay tuned, folks. So who am I? You got to be careful who you listen to. I've been in the mortgage industry. Geez, I feel like I financed George Washington's log cabin, but in any case, I've been in the mortgage business for a very long time, 37 years, 38 years almost. And I've helped over 5,000 families, done over $1 billion in production. If you watch Channel 11, I've been their in-house mortgage expert for probably almost 20 years. I'm not telling you that out of ego. I'm just telling you that because it's important for you to know who you're listening to, because you shouldn't take advice from everyone. And I'm going to maybe this is a good point. It's not part of what I was going to cover, but it is a good point. Folks, be careful. When you tell your family you're going to buy a home and you tell your coworkers you're going to buy a home, everyone starts giving you real estate and financial advice almost immediately. And they're not doing it to harm you in any way. they're doing it because they care about you. If it's your family, because they love you. But you got to be careful. You know, the analogy I always give is if I break my ankle, I'm not going to my dentist, although they're both doctors. Okay. So go to the professionals. You know, the market is constantly changing, pricing is constantly changing. Unfortunately or fortunately, areas are changing. Some areas are going through an upswing, some areas are going through a downswing, and the mortgage markets are always changing. So you have two professionals here to turn to for advice. I'm not saying don't listen to your friends, family, and coworkers, but get your expertise from the experts. So sorry, Jeremy, I had to say that.
No,
Um,
I agree 100%. I think that's really important.
Yeah, so there's a very unflattering side angle of me, but you know, that is me on channel 11 on NBC. So let's talk a little bit about some of the products and programs that are out there. FHA. FHA stands for the Federal Housing Administration, and I'm going to share with you today pros and cons of these products because they're not all perfect, right? FHA allows for a lower down payment. It allows easier qualifying guidelines. Generally, you're going to qualify for a little bit more home. They're much more lenient with credit. However, they do have what's called a mortgage insurance. That's an insurance that protects the lender in case of a default. It's a little bit on the high side. Their appraisal standards are a little bit stricter, and you must use an FHA approved lender, which of course we are. The next is VA. And if you are a veteran, and many people don't know this, you don't only have to be a veteran. If you've been in the reserves for 6 years or more, you also may be eligible for a VA loan. And if you're a veteran, I'll thank you in advance for your service. A VA loan allows you to put no money down. It's a little bit easier in terms of qualifying. It's a little bit easier on credit. The cons, it must be a veteran or a veteran and their spouse. And there is what's called a funding fee, which is similar to a type of mortgage insurance that you pay. But we can get a veteran into a house with literally no money down, and we can negotiate having a seller help pay some or all of the closing costs. So, and you know what? If you're a veteran, you helped protect or are helping protect the safety and security of America. I mean, I think that's only fair and only right. Then there are what are called conventional loans. You may hear it called Freddie Mac or Fannie Mae. Generally, they're going to require 5% down, but there are programs that will allow you to do it as low as 3% down. There is no mortgage insurance if you put 20% down, but remember, you could put as little as 3 or 5% down. The downside to a conventional loan, they do have a mortgage insurance, but the mortgage insurance goes away once you do reach sufficient equity. They are a little stricter on credit. They are a little stricter on the amount of loan size you can afford. So, you know, let's talk about some of these myths that I talked about earlier. Myth number one, I don't have a lot of cash. Well, okay, no problem. So, you know, you hear, how much do you think you need? Well, you know, 5%, 10%, 20%, they're all right and they're all wrong. It really depends on your situation and which product and program you use. That's really what's important. When you're buying a house, I want you to visualize two buckets in front of you. And bucket A is for down payment. And again, if you're a veteran, 0 down. Actually, there is another type of loan called a USDA loan if you're buying in the rural areas. Rural meaning not Baltimore County, not Baltimore City, but maybe like Frederick County, some of the counties on the Eastern Shore, Carroll County, some of these counties, even parts of Harford County. Some of these counties, you can do what's called a USDA loan. So if you're looking rural, let me know. But the bottom line here is bucket A is going to be for your down payment. You know, it could be anywhere from 0, 3%, 5%. You could put 20% down if you have the funds. And the second bucket is going to be for what's called closing costs. And closing costs are made up of the following. There are lender charges. Lenders charge for an appraisal, a credit report, a survey. We do flood certifications. Then there are title company charges. And Jeremy can certainly make an introduction with a title company. The title company is going to research the title. They're going to conduct a settlement. They may do a survey. They're going to issue title insurance for the lender, title insurance for the owner. And then there are what are called prepaid items. Prepaid items are escrows, reserves, if you will, for property taxes, fire insurance, fire. There's a lot of names for fire insurance. It's called hazard, homeowners, fire. They're all the same thing. So you have to be careful because closing costs in Maryland, I'll see if you agree with this or not, Jeremy, but they generally average somewhere in the 4 to 4.5% of your purchase price. That's an
that's about right.
And what we'll do, Jeremy and myself, we'll give you a breakdown. So before you even put in an offer, we'll give you some estimates if you find a home that you like. So what if you don't have enough money for down payment? What do? Well, here's a couple ways to think about it. Number one, maybe a family member could help you out. Believe it or not, and again, if you're driving, pull over because this may be a little shocking to some of you. A lender can give you a credit, and that really depends on what's happening in the market. There are times when lenders really can't give credits, and there are times when lenders really can give credits. So
Realtor too.
Say it again.
Realtor too. We can give credits too.
Absolutely. And I know Jeremy's going to talk about that in great detail. There are secured loans. I've had people sell their stamp collection, their baseball card collection, cars. And then this is really where Jeremy steps in, and you will immediately see the expertise that Jeremy provides. The seller can help with closing costs. I say can, because it depends on market conditions. If you're in a seller's market, which means there are more buyers than homes for sale, you know, you might want to give the strongest offer you can and not ask for help. If you're in a market, however, that's a buyer's market, which means there are more homes for sale than there are buyers looking, well, then the buyer has the advantage. And so look to Jeremy for that expertise, but many times we can get the seller to help with closing costs. I need good credit. Myth number 2, I need to be perfect. Well, what is the minimum credit score? 750, 640, 580. Again, it depends on the product. It depends on the program. All of these are scores I get loans approved for. So it, again, just depends on the product. I want to clear up a big myth right here. I want to clear up 2 of them, actually. Okay? Big myths. So the first myth is, will you, as a mortgage lender running my credit, won't that hurt my score? No. The answer is a flat, emphatic no. No, it doesn't. Now, if you are shopping credit cards, every time a credit card company hits your credit report, that hurts your score. If you are searching for a personal loan, every time that creditor hits your report, it's going to hurt your score. Mortgage companies, you could actually go to multiple mortgage companies as long as it's within a 30 to 40 day window, and it will not have any adverse effect on your score. So this happens a lot, Jeremy. I bet you hear this all the time. I hear it every day, sometimes 4 times a day. Well, I just went to Credit Karma. My credit score says 690. How come yours says 640? Let me explain something to you, folks. now that we know a mortgage company running your credit score won't hurt you, let's go a little deeper, okay? There are three ways that credit scores get graded, three scoring systems. The first scoring system is for a credit card or store charge. There's a completely different scoring model for a car loan, school loan, personal loan, and there is a completely different scoring model for a mortgage. So if you go on a site like Credit Karma, or you look in your bank statement and you have a TransUnion or Equifax score, that's an accurate score, but it's a score for applying for a credit card, not for a mortgage. They're a little bit different. So again, I've written several books, but one book I wrote is called Yes, You Can Get a Mortgage. So there are products and programs for folks one day after a bankruptcy, one day after a foreclosure, one day after a short sale. And, again, there are multiple ways to get this done. Don't let that stop you. So we talked about another reason why people may be renting. And one of those reasons is they don't feel they can afford the monthly payment. Again, as Jeremy and I said earlier, right now, a mortgage may actually be less expensive than rent in many cases. You might be shocked, pleasantly surprised. But let's look at this, okay? When it's tax season, you see lots of people walking around with a smile on their face, right? So, Jeremy, you're not an accountant, correct?
Correct.
Okay. I'm not an accountant either. I don't play one on TV, and I am not an attorney. So talk to an accountant, attorney, or financial planner, but I want to give you an idea, okay? When you buy a home, there is the potential that your interest on your mortgage and your property taxes could be tax deductible. So during tax time, you always see people from like January to June walking around with like this smile on their face. And in reality, you should be crying if you get a refund. And I'll explain why I say that, okay? The problem with getting a refund is the government has had your money for 18 months and paid you zero interest. I hear people say it's forced savings. Well, you wouldn't do this, would you? Would you do a deal where if you give me $1,000, and I'll promise in 18 months to give you back 900? Nobody would do that, would they? Right? And right now, if inflation is at 5%, every dollar coming back to you is worth 95 cents, not a dollar anymore, right? So what am I talking about? Let me explain. Let's say you get back $3,600 every year as a tax refund. Well, if you do a budget, this is what a budget might look like, right? Here's what I bring home, because that's where you have to start. What are you bringing home? Doesn't really even matter what you make. It matters what you bring home. So here's what I bring home. I have a car, insurance, utilities, food, entertainment, clothing, whatever. And what I have left every month is $1,000. Well, if you're getting a $3,600 refund, and we think that's a really bad idea, why not change your withholdings at work and get that money back every month? So if you're getting an extra $300 back every month, you really could afford $1,300 and it would only feel like $1,000. And if that's confusing or I'm going too fast, call me and I'll be happy to explain it to you. But basically, instead of getting that refund back, use that money, get it back every month. Now, when you change your withholdings, you want to do that with a professional's advice so that at the end of the year, you don't owe any money and you don't get any money back. It should be a complete wash. So let me ask you this question. How would you like to buy a home and have someone else make your mortgage payments? How would you like to have a great tax benefit that you don't get on a standard home? And how would you like to create a side hustle income without leaving your sofa? Well, I'm going to share that with you. A great way to make your payments more comfortable is to purchase a multifamily home, 4 units. And you can buy a 2, a 3, or a 4 unit home. If you're a veteran, you can do it with 0 down. And if you're a standard buyer, normal, you can do it FHA with 3.5% down. Your tenant's rents may cover your entire mortgage payment and give you a side hustle income. And the other units that you are not living in, so you're going to live in one and rent out the other, the one you're living in it is fine. The other units can generate a large tax benefit for you. Now, you got to be fair, right? Because you will now be a landlord. You will have other people living in the same property, but if you live in an apartment building, you have other people living in your property anyway, don't you? You will need to make sure, actually, Jeremy will help you with this. We're going to make sure that the property is zoned correctly. And yes, if there are repairs, you will be responsible for it. If you want to take a screenshot of this, this is terrible. I look terrible on the side. My God, horrifying here. But this is a segment I did on Channel 11 about this topic. And I'm really so excited about this topic that I actually wrote a book about it that just became an Amazon bestseller. You can go to the realestateloophole.com. You can take a screenshot of that if you like.
Yeah, strongly urge you to read that book. It's really good.
Thank you. Thank you. Just really trying to get the message out to the world. You can't always listen to the media. So sometimes the media is not really pointing you in the right direction. But it really is a great opportunity. And Maryland, D.C., Pennsylvania, chock full of Virginia, chock full of multifamily properties that, Jeremy can help you identify.
Yeah, and Brian, if I can just interject real quickly, those multi-unit properties tend to be a little bit less expensive as well. So why? I don't really have an answer for that, but maybe because people don't know what a good possibility they are. But like you said, I mean, you could use someone else to pay your mortgage for you.
Yeah, and I gotta tell you, I just did a loan that closed not long ago, and these buyers were like, they were like laser focused on a specific area, a specific zip code, because they wanted to be in a specific school district. Okay. And they did not qualify. They weren't even close, to be honest. And you know what we did? We put them into a 4-unit property, and we could count the rent from the other 3 units as income. So it allowed them to get in just on their income, but using the income from the other units. And now they have they're in that neighborhood they wanted, and their child is in the school system they wanted. So interesting. There are really 4 types of lenders out there. There are mortgage bankers, which means they are theoretically lending you their own money in a sense. There are independent ones like us, and then there are bank-owned mortgage bankers. There are small banks and credit unions that actually are lending you their depositors' monies. And then there are mortgage brokers, and mortgage brokers are simply acting as middle folks. They are acting as the middle person for between you and 1, 2, or 3. They don't have funds to lend. They're just placing your loan somewhere. There are pros and cons to each. But here's another myth. I hear this all the time, and I hope no one gets offended by what I'm going to say. Let's say, and I'm not picking on any particular bank, but let's just say you bank with PNC or Bank of America or Truist or whoever, it doesn't matter, okay? Howard Bank, or I guess their First National Bank of Pennsylvania. Look, here's the thing. If you think that the bank owns a mortgage company, so PNC owns a mortgage company, you know what they named it? PNC Mortgage. Wells Fargo owns a mortgage company. You know what they named their mortgage company? You'll never guess. Wells Fargo Mortgage. So those are bank-owned mortgage companies. And here's a little bit of reality, okay? obviously you can shop and obviously you have to go wherever you're comfortable, but I just want to clear up a myth, okay? If you have 2,000 or 20,000 or 30,000 or 130,000 in a bank, the bank has a separate subsidiary mortgage company. So it's a company owned by the bank, but you probably are not going to get too much preferential treatment, candidly. The reality is, if you have 3 million or 30 million in the bank, you might get access to a private banker, in which case it would make sense to use them because you will be getting money from the bank directly. If you have other than multiple millions of dollars in the bank, you're probably going to be working with their subsidiary mortgage company. And while I'm sure they'll try to do their best for you, I don't think you're going to get anything special. So here's a little bit of a breakdown. Again, this is also in your workbook. Again, our company is an independent mortgage banker. Some nice comments from the Daily Record, the Baltimore Sun. But let's talk about mistakes to avoid. You know, what we've been giving, Jeremy and I have been giving you so far is knowledge. But sometimes it's more important to know what not to do to save yourself some money. So let's talk about that, okay? Mistake number one. Let me ask you all a crazy question. And it really is a crazy question. Would you give me $1,000 if I promised to deny your loan and make you miserable psychologically for the next 90 days to a year? Who wants to do that? Nobody, right? No takers. Why am I asking you such a ridiculous question? Because if you go out and find a home and you have not been pre-approved yet, first of all, you're probably not going to, I don't think Jeremy's even going to take you out till you get pre-approved, okay? I don't think any agent will take you out till you get pre-approved. But what happens is, if you don't get pre-approved and you put in a contract, you're going to put up $1,000 at a minimum, because you're going to do a home inspection, you're going to do an appraisal, you might do a pest inspection. And if your loan is rejected, folks, you don't get that money back, okay? And you have the emotional distress and the up and downs of looking for a home and not getting approved. Look, the right thing to do before you do anything, and I mean anything, is to get yourself pre-approved. That way you have your comfort levels established. You have for down payment, for closing, for monthly payment. You know which products and programs, you know what price ranges you're going to look in. And then Jeremy can jump in and really tailor his search to what you're looking for within those parameters.
Yeah, if I can interject for a quick second, Brian, the last thing you want to do is get out there and find the perfect house and not be pre-approved, you know, and that happens. You want to have that, you want to feel comfortable that when you go out and look at those houses, you can buy that house that day. Because in a market, in a fast-moving market, you know, you go out and look at a house that you love, and then it takes, you know, a couple days to get pre-approved, the house is gone. And that's something we want to avoid.
Right. And you know, honestly, it takes an emotional toll. If you go out there and you find a house for 300 and you're in love, and you find out you only qualify for 250, that's like a punch in the stomach, isn't it? You know, we don't want that. We want you to be in the right areas for your comfort levels. Not what you qualify for necessarily, but, you know, what you're comfortable with. That's a key question that Jeremy and I are going to ask you. What are you comfortable with? So mistake number two, we just talked about it, but there's a lot of words bandied about, right? Pre-approved versus pre-qualified. Pre-approved means I have verified your income, your assets, I've run credit, and I could issue a very strong letter which will help your negotiating posture, because the seller will know there's no question you're getting a mortgage. If you've just been pre-qualified, you talk to a lender on the phone or you type some things into a website and, it spits out an answer. But they haven't verified anything. They haven't seen your W-2s. They haven't seen your bank statements or your pay stubs. So you want to get pre-approved, not just pre-qualified. Don't worry, there's no blood test, there's no urinalysis, there's no physical. We're good, okay? So we won't hurt you, I promise. And if you want to take a snapshot of this, this is generally what we're going to need. I'll leave this up here for a second, if that's okay.
And Brian, the pre-approval is really important. It really does help with negotiating.
It makes all the difference. Yeah.
Yeah, and having a lender that that I know what I'm taking my clients out and I feel comfortable with, and I can tell that agent, the listing agent, how confident I am in the buyer being able to get that mortgage. That makes a huge difference. It really does.
Yeah, and what we do often, Jeremy, is we'll actually call the listing agent on your behalf and verify with them that you are truly formally pre-approved. And Jeremy, we've worked on both ends. We've worked with you as the listing agent, and we've worked with you as the buyer's agent. And it makes all the difference in the world when the agent and the seller have the confidence. It's not always about price. If you have a very strong pre-approval, sometimes that's going to be beat out even a higher price where the person's just pre-qualified or sounds good. Everybody wants a sure thing, and why not? They should. So here's something. This is just personal opinion. Okay. Mistake to avoid: working with an online lender. I think it's a mistake. Okay. And when I say online lender, you can apply with us online, but you're actually going to speak to me as a human being, not a robot. Okay. I think it's very important, just in Maryland as an example, or Baltimore even specifically, we have ground rents, right? Leaseholds. And I'm not going to go into a whole conversation about it, but generally once or twice a month, I get a loan that's been rejected by an online lender because they don't even know what a leasehold is, because they're in Nebraska and they never heard of a leasehold, and it's an automatic denial. Well, we do loans with leaseholds all day long. It's not an issue. So, you really should think about working with a lender that knows the area, knows the ins and outs, knows the nuances, and generally can answer your questions, and that you don't have to track down and hunt for, that actually will help you. And here, just to tell you, this is from Mr. Kirkland. The communication between us made me feel very comfortable about the process. Folks, it's scary getting a mortgage for the first time and buying a house. You need folks like Jeremy and myself who literally will take you by the hand. There's no such thing as a dumb question. And make sure that you understand what your options are. Make sure when you have a question, it gets addressed, and make the process as smooth for you as possible. We talked about this, myth number 4, not knowing your score. What you see on Credit Karma is not your score, okay? So, and again, a mortgage company running your credit will not hurt you. And this is maybe the biggest mistake of all. I've been telling my wife for 30 some years that ugly is good, okay? And she now believes it. But folks, the ugly homes out there are the opportunity if you're the kind of person that can live with a renovation. Our company happens to be the #1 renovation lender in the United States. But the real opportunity is to find the ugliest house in the greatest neighborhood. And we can lend you the money to buy the home, renovate the home, and you will now have, it's even better than a builder, to be honest, because buying new construction tends to be very expensive. Buying an ugly house in a great neighborhood, you get to choose the flooring, you get to choose the kitchen, you get to choose the appliances, you get to choose the renovations you make to the exterior. Maybe you want to put a deck on. I mean, you can truly customize this property. And you know what happens? 99.9% of the time, you have increased the value. I just closed a loan in 21207. The people bought it for 180. We put 50 in it in renovations. They love the house. And so they're in for 230 and the house just appraised for 295 after renovation. So, I mean, it's just a phenomenal situation all around. And in a market where inventory is a little tight, don't overlook the ugly. Ugly could be the new beautiful. So some additional programs. There are buyers who are self-employed but have large expenses. We have a product for you. We have buyers who are 1099. Like if you work Uber or Lyft, or you're an aide, or I do traveling nurses. There are lots of folks in different industries that are 1099. Even if you're writing off a lot of expenses, we have a product for you. There are buyers who want to buy investment properties. We actually have a no income verification investor loan where you can hold title in the name of an LLC, which is a big deal for a lot of people because it gives you an extra layer of protection, and Fannie Mae and Freddie Mac will not lend to a corporation. And finally, we have a product with, sometimes we have buyers that have a lot of assets and not a lot of income. If you have sufficient assets, we have a program even if your income's low. So, it all comes back to this. Call, set up a free no obligation consultation. Here's all of my information. Won't cost you a thing. You have no obligation. And if we can help you, we certainly will be happy to. We'll definitely go over your options. And even if you're not ready yet, we'll work with you. We'll guide you. We'll give you a plan. So I hope everybody picked up at least one good tip. It's a good time to buy a home. And like I said when I started, you're going to be making a mortgage payment. Decide if you want to be making your landlord's mortgage payment by renting, or you want to start building generational wealth yourself. So with that, I'll turn it over to Jeremy, and thank you very much.
Thanks, Brian. I really appreciate it. Your insight is invaluable, and I think any buyer out there listening, the things to take away from this are, get pre-approved. Call Brian, get pre-approved. Then call me. We'll get a search set up for you. We'll look at the ugly houses. We'll find a good one for you, and we'll get you in that house. And like he said, whose mortgage do you want to pay? Do you want to pay your landlord's, or do you want to pay one that will give you benefits in the future? And those benefits are equity. Those benefits are possible tax deduction. There's a lot of reasons to buy versus rent, even with interest rates going up. Just because interest rates are going up doesn't mean that rents aren't going up too. And like I said earlier, rents are going up at a faster pace than interest rates are going up. So I think it really is a good time to buy. And, to be honest, I think the pendulum is swinging back in the buyer's direction. It was a real strong seller's market, and that has changed over the last, 6 months or so. And so buyers have a lot more leverage. And I think that obviously is a huge benefit. Now, when you call Brian and get pre-approved, and you then call me and we get you out there looking at houses, we have a program that will save you or give you a credit, in essence, for $1,875 off the top. So in other words, any seller help that you were looking for, or help with closing costs, we're gonna start you off with $1,875 credit. Brian, can you go to the next slide? This is Mr. Lister's Premier Buyers Package. Here's how it works. $1,000 credit from Mr. Lister when you purchase your home. You can go to our website and check it out. Brian has committed to give a $500 lender credit and our title company, Definitive Title, will give a $375 credit. That money will go to help you with closing costs. Maybe on the lender side, it'll help you buy down the rate a little bit, but it's a huge benefit. Why go to any other realtor or loan officer when we're offering you right off the bat $1,875 in savings? If you're looking at putting 5% down plus another 4.5% in closing costs, $1,875 is going to offset some of that. It's going to allow us to ask for a little bit less from the seller or from the seller if we need to. So it's a huge benefit, and I urge you to give us a call. Now is a really good time. As we get into the winter months, sellers get really nervous because it slows down. That gives you even more leverage. So let us help you buy a home and get a great deal. And included in that great deal is this $1,875. We look forward to hearing from you. And if you have any questions, feel free to give us a call. Thank you.
Thank you, and thank everyone for being here. I'm going to just go back for a second and put your slide up so we have your contact information.
Yeah, this is my info right here, guys. So I've been in the real estate business for a long time. Top producer in the real estate business. I'm a broker, so I own the company. And like Ryan said, everyone is going to be giving you advice on when you tell them you're going to buy a home. Everyone's going to have advice for you. It really pays to talk to people who've been in the business, who know what they're doing, and who work together. That's really important.
All right. I thank you, everyone, and thank you for having us here today, Jeremy, and we look forward to speaking with you.
Sounds good. Thanks, Brian.